continue to fall down. Depends on the supply and demand again. Okay, it will be visible based on the price action, but we need to understand the logic of the point of control, why it attracts the price action. Okay, now let's understand, if these buyers are getting successfully defending their position, or they are trying to reducing their losses, they will average their position at the lower side with the remaining capital. Okay, now let's say the day they are succeeding. Okay, the demand is seen, the people are adding more and more position. Looking at the demand, the more people are coming in here to buy. Okay, now the sellers will start to lose hold. Okay, so what will happen, their average will come slightly towards this level. Okay, in between, where middle or somewhere, I don't know, we don't know for sure about that, how many quantities are deployed, but we can just assume. Okay, now once the price starts to move higher, the sellers will start to lose the control, and once the average price is breached, or once they are going closer to their initial buy level, they will start to push the price even with more strength. Hence, the price will once again revisit this level. This is the reason most of the times the market will try to retrace towards the point of control that is still pending to revisit. Okay, now why this initial level they have to visit? Why not the average? You may ask, if this average price is breached, they will be still in profit, the buyers, and sellers might be in the loss due to their average pyramids, due to their pyramid positions. Okay, but no, they want to break the back. They want to break the backbone of these sellers. Same goes for the buyers if this if this was the opposite direction. Okay, so what will happen, these buyers will start to buy more, the sellers will start to lose control, and they want to break the backbone of the sellers, and that will only happen once their initial level is breached. Okay, so if I had initiated a position at my pilot level, then that level will always be my reference point. Okay, if I'm in a profit of, let's say, 50 points, I will not cut my position if I'm in profit as long as it is coming to the 20 points. Okay, let's say I buy it at 100 rupees and the price is now at 150. I will not immediately cut my position. I will keep on adding if I want to, but I will not exit my position. If it start to retrace, I will still not exit my positions if it loses the 30 points and trading at 120. Okay, what I will do, I will try to buy more if I'm getting at lower level. Okay, now at this point, where I will keep my stop loss at cost, because if it moves 50% beyond my purchase level and then it retraces all the way back to the cost, there is no logic in remaining in the position, because clearly I'm losing the strength. Same goes with the buyers here, or the sellers. Sellers are sitting in the profit, and now even after pyramiding, they are losing the strength, and as soon as their average initial pilot level position is the breaching, they will start to lose. They may fight here more than ever. Okay, that's why you will see the price can touch here and then immediately bounce back. Okay, why? Because this is where the sellers will go even more aggressively, because they don't want to lose this position now, their pilot position. Okay, that's where they have the opportunity to add to their original position. They can get better price, so they will keep on shorting here and the price will start to move back. But even if they still not succeeding, the price can break and we can see another up move. Okay, so this is what happens with the point of control, and it acts as a magnet to the price, and every point of control that is registered throughout every day will be considered as a virgin point of control unless and until it is not revisited by upcoming any day. Okay, all it needs is just one touch of one single price action. Okay, it doesn't have to be a consolidation, it doesn't have to be just a breakout, always a breakout. All it needs is just slight touch for the price action for it to be completed. Okay, unless and until the point of control is not revisited, I'm saying revisited. Okay, it will be called as virgin point of control in the market, and it will be always visible in the chart. That level will always be the reference point for the market participants. Okay, so I'll show you on the chart now. So I hope you got the idea about the volume profile and the point of control. Okay, so This is, you will see. Now what I do is I just add horizontal labels and name it as a value area high, value area low, YPOC. YPOC means yesterday's point of control, meaning every day's point of control will be termed as a YPOC, and you will see at the lower level. You can see every days of point of control here is visited the next day. Okay, here it is visited by touched by the next price action. Again, it is touched by the price action. Again, this level is touched by the price action here. Now this is still invalid. Sorry, valid, because it is recent price, recent point of control. Okay. Now notice there are 2 point of control that are still yet to visit, and that's why these are termed as a virgin point of control. You can see here this level, how close it came to touch this level. It was only planning to revisit that level, which still missed slightly by hardly, let's say 10 points, I think so. Yeah, not even 10, 10 or 15 points, whatever it is. Okay, hardly missed by 15 to 20 points here, and then look at the bounce. Okay, but it is still virgin point of control because the price is not touched it, and that I will be keeping the target in case we get the correction below this level. Okay, now as we know, the market is showing correction. Okay, now there is a reason for the market to be corrected. Why? There is a virgin point of control. These sellers are averaging their positions, and now the price is getting their chance to correct to until this level. They will keep on selling until they revisit this level. So for any correction that is going to happen in the market in upcoming days, I will keep my target for the Bank Nifty as this 51,867, or to make it as around 870. That will be the target for this correction. Same goes for the Nifty. Okay, Nifty doesn't have much in the closer proximity, but it is this, the first target will be this 24,035. Below that, the bigger correction if comes, 23,670 will be the target based on the futures. Okay, volume profile is applied on the futures only because it has volumes. Spot chart doesn't have volumes. Okay, you may get volume profile applied on the Bank Nifty spot chart on trading view because they have volumes. Okay, they have collective volumes of all the participants. Okay, you can see the single 5-minute time frame volumes are 5 million. On the other hand, on the futures chart, actual volumes are for entire day just 2.4 million. Okay, so don't read these volumes too much, because sometimes what will happen, you may plot unconsciously on the spot chart and you may misread the data. Okay, because here on the spot chart you will be able to plot the volume profile, but this feature is not allowed in the other brokers where they are providing the data, where the trading view providing the data, like Zerodha, Dhan, trading view, fires. You will not be able to plot volume profile on the spot chart on there. Okay, so you will be able to plot the volume profiles in the trading view on the spot chart. So kindly observe what charts you are using. So this is the reason, don't just plot it every day. Okay, keep one chart so that you will understand, yeah, this is the futures chart where I have plotted all the data. Okay, so you can see now the price is correcting. Okay, so now this point of control will be the target for the upcoming correction. So this is related to the point of control and how it works in the market. Do you have any questions related to the same? If not, we will move to the value area and value area topic. Okay, let's continue for the value area. Now, as you can see, value area have relationships, which I will just share with all of you an image. Okay, so this is the 2-day area value, 2-day value area relation. Okay, so every box is a value area of 2-day. Okay, every 2-day, consecutive 2 days will have a value area relationship. And based on that, the upcoming day will perform, or based on that, the upcoming day will have its outcome. Okay, so I will give you brief information, then we will move on to the detailed understanding. Okay, so the first is unchanged value area. Unchanged value area is one of the rare and high probable trade setups. Unchanged value area meaning 2 days back to back the value area is same to same. This is one of the high probable breakout structures for the market. Okay, you will see breakouts are happening impulsive. The explosive breakouts can be expected based on the price action also. Okay, if the market is consolidating and it is on verge of a breakout or breakdown, and at that time you got the unchanged value area, don't miss out on the breakout opportunities. Whenever the breakout happens, high more than the probability will be more than 90% for that breakout is going to get follow, and you should not be missing out on those big moves. Okay, next one is outside value, meaning today's value area is engulfed has engulfed the previous day's value area. Okay, just like a outside like a engulfing candlestick pattern. So this outside value area means the market is expanded. It may not move according to the expectations. Market may remain range bound for the next day because the price and volume both have expanded here. Okay, next is inside value. Just like unchanged value, inside value presents contraction, better contraction than unchanged value. Do not miss the breakout opportunities like a triangle pattern. Okay, but this is not a triangle. You may see the price action like this is the 1 day. Okay, price moves like this, and next day price moves like this is not a triangle pattern in any sort. But in this case, if the market has traded in this value for this day, and the next day market has traded in this value in the next day, it means there is no decision, clear clarity in the price, and market is contracted. So this is a contraction in volumes, not in price. Okay, and we may get a breakout in either direction according to the market favor in the coming days. So this inside value relationship also one of the most important to observe and too costly to ignore. Okay, because such days can put you ahead in your equity curve in just 1 day. This 1 day can compensate the past 5 to 10, even 5 to 10 losses if you trade it lightly, carefully, with cautious. Okay, next is higher value. This denotes a strong bullish trend. Okay, next day you should be looking for the buying opportunities only. One mistake in the last session we did that and cost us the up move. Okay, I'll show that. Okay, simply I'll show you just a second. Okay, you can see here on this day. You can see on this day it was a higher value relationship. Can you see? This was the outside value. This was the higher value. Okay, after this outside value relationship, it was completely unexpected for the market to give an uptrending move. Okay, so I was expecting the Maya market to correct because of this outside relation until the CPR did not happen. So we captured. We did not catch much on this day except this correction I just captured on the higher side. Okay, I mentioned it also on the chart on the Telegram. Next day you can see this day turned out to be the higher value relationship. Okay, on this day the mistake we did is we were looking for the correction in the market and ignored the data. So when this data was higher value relationship, look at the CPR. It just bounced from the CPR and give you the beautiful upside trade. That's what we missed here. Okay, so whenever you get higher value relation, it means the trend is bullish. You should only be looking for the buying opportunities. Okay, and such buying opportunities can be presented in any levels. Mostly if it's flat, look for the CPR. If it closer to the value area high or the POC and it is bouncing from that level, then also look for that. Okay, in this case, these levels are important to observe. Value area levels, that is high and low. POC, that is previous day YPOC, and previous days high low. Okay, these are important levels. Also CPR. But at the same time, market is not going to be reacting all these levels together. Okay, it will be at either CPR, it will be at either value area levels, it will be at either POC level or previous day high low levels. Okay, so you just have to identify where it is